people talking really good things about the Argentine economy. Look, we suspect you've probably got another 5 years ahead of you before we need to worry about getting out of these things.
Caught up in price action and go, oh, it's gone up by X amount. That's not the way to look at it. You need to look at the valuation. Is it still cheap? Yes or no?
These things are still cheap. We're still buying Argentine equities.
Exiting a trade. From being in the newsletter the past couple of years, I am in TGS, which is Transportadora de Gas, I believe, with an average cost of $12.22 and YPF at $21.59. I also hit in later that I wished on BMA, which is Banco Macro, but am in at 71.23. What do you see as exit prices for them? Thanks. That's from John.
We don't have specific exit prices as such. It's more going to be when we start to see people talking really good things about the Argentine economy and the economic miracle. If we start seeing an impressive popular opinion like CNBC and whatever, okay, where's the effect of the Argentinian economic miracle, so on and so forth, it's all over. Or at least the easy money's been made, harder money's been made too, and it's probably time to get out. It'll be fully and valued. It'll be anticipation of good times to come. Yes, we've up fivefold so far from the initial positions back in September 2021, on average fivefold. These things are still cheap. Look, we suspect you've probably got another 5 years ahead of you before we need to worry about getting out of these things.
Probably going to be difficult with so much attention being put on Milei by people like Musk, that it'll be easy to confuse all the hoo-ha with actually whether these things are overvalued or not, if that makes sense.
I don't want to say it was easier buying Argentine equities 4 years ago, whatever it was. It wasn't easy then. In fact, we'll go through it later on, I think. But anyway, so John, hopefully it gives us an idea. It's not too late to get in. We're still buying Argentine equities and client portfolios. There's still significant upside to come, even though we're sitting on 5x returns so far.
Very good.
I would just add that it's still worth going and just looking at valuations, right? Because you can understand that if you buy a company for $1 and it goes to $2, but if it started off at a PE of 2, is it expensive because it's doubled? No, it's still probably dirt cheap. So it still pays to look at it within the context of where it's not purely looking at price action. I think people get caught up in price action. They go, oh, it's gone up by X amount. That's not the way to look at it, because if it's gone up, you need to look at the valuation. Is it still cheap? Yes or no? And also, and I've mentioned this before, you can have a company where the share price has increased, but if its revenue and margins have increased, it can actually be cheaper because it's making more money. So you can actually have a PE while the share price rises. It's unusual, but it can happen. So
we look at BMA, Chris. I think from recollection, I think the PE for BMA, when we bought BMA, I think the PE was about 5. Dividend yield was like 5% or 6%, something like that. It's still sitting on a PE of 5. The forward PE is 9 times, even though it's goodness knows what.
Well, we did have this with coal before. So just for listeners and viewers, imagine, if you will, a company that you buy for $1. Over the course of a year, it finds, let's say it's a coal company, and it finds a new resource, or it expands an existing resource. And at the same time, the price of coal maybe goes up. So its margin expansion increases. So let's just say for a shits and giggles, it was making $1 million when you bought it. And now it's making $2.5 million in profit. And you bought it for $1 and it's at $2. At $2, it's actually cheaper than it was at $1 because it's not making $1 million a year. It's making $2.5 million a year. You've got to understand that. You need to kind of understand what's going on to some degree with a company, and you can easily tell that within seconds by looking at the valuations and the PE ratios and incomes. You can okay, well, what's the market cap? What was the market cap? What's its income? What's the PE ratio? So back to the point, just because stuff has gone up doesn't mean A, that the party's over. It doesn't mean B, that it's actually expensive. That's should always be on your radar, no matter what you buy or sell.
If I take BMA, when we bought that, the piece of junk dropped 50% in the 12 months after I think we bought it. We're up fivefold. Now we could be up tenfold if we're smart enough to have bought like 12 months later. In fact, I think, yeah, I'm sure some clients we got into 12 months later and they did buy it way cheaper than our initial price. Anyway,
I mean, we got the bottom in 21 there, but like you can see that it stayed bottoming all the way through till end of 22.
Yeah, it was 2 years.
23.
But if you look at that bonding process, like a 50% drawdown, is that a bond?
Well, look, in hindsight, it all looks like a nothing move. Like that 50% move to us at the time was dramatic, but now you look at it and it just looks like a flat line on a chart.
Yeah, exactly.
And banks are important as well, folks. And we've talked about this before, because what you got to remember, and this is a little bit unique to Argentina, is that these were banks that survived in an environment where they basically didn't issue credit. A banking operation that by and large doesn't issue credit because there was no credit market just because it was so messed up. Now you suddenly start introducing a stable currency, which they've had. So Argentina's just, I think it was it 2 weeks ago or something, they basically said you can use dollars. So dollars are now legal in the country, even though on the black market, everybody's using dollars anyways. It's now legal, but it's now legal at a point where it's not necessary because the convergence between the dollar exchange rate and the the central bank rate has converged to the point where it's about 10 pesos difference. It's by and large the same, right? Whereas before there was this massive variance, which was why there was a black market. Now there's almost no black market, but it's also the currency stabilized. And so now the ability for banks to issue credit is massively increased. And so your profitability, like you think about normal banking operations, it's a credit business. These were banks that basically didn't have a credit business, and now suddenly they do. So the fact that it's up so much is like it's coming off of a bottom of like not being able to do business.
Well, it gets better. I mean, I don't want to sit here and talk a good story, but there's other people out there who can talk better stories than me. But if you can imagine, if the Argentine economy really didn't exist on cash only, it was very, very difficult to get credit. Now, what happens? You start introducing credit to the system. It's like, maybe economic growth will surprise the upside.